They stole your silver. That is the only way to describe what happened over the last 48 hours in the global markets. If you were watching the charts yesterday, you saw a bloodbath. You saw panic. You saw silver crash 8% in a heartbeat. You saw headlines screaming that the bull run was over, and you probably felt a knot in your stomach. You probably thought about hitting the sell button just to stop the pain. But today, the truth has been revealed. Look at your screen. Silver is trading at $74.54. We are up over $3 in a single trading session. We have recovered nearly 50% of the crash in the blink of an eye. This was not a market correction. This was a bear trap. This was a calculated algorithmic flush designed to do one thing and one thing only: to separate you from your position before the year ends. The banks knew that retail investors were leveraged. They knew where the stop losses were sitting. So they pushed the price down, triggered the stops, stole the shares, and immediately reversed the engines. But why? Why would they go to such lengths to shake you out right now? Because they know a secret. A secret so massive, so catastrophic for the supply chain, that it has a strict deadline attached to it. They know that on January 1st, 2026, the rules of the game do not just change, they break. We are not looking at a standard bull market anymore. We are looking at an extinction event for available physical silver. While you were staring at the price chart, the real war was happening at the docks in Shanghai. While you were worried about the Federal Reserve and interest rates, the real threat was emerging in the data centers of Silicon Valley. What if I told you that the largest supplier of processed silver in the world is about to lock the doors? What if I told you that the inventory you think exists in London and New York is already spoken for? In this urgent market update, we are going to expose the documents they do not want you to see. We are going to explain why $74 is a gift from the gods, and why, if you do not hold physical metal before the ball drops on New Year's Eve, you might never get your hands on it again at a reasonable price. The trap has snapped shut, but if you are still holding, you are not the victim. You are the victor. This is not a drill. The countdown has started. But before we expose the China protocol and the impending supply shock, I need you to do one thing. The algorithm tries to bury this information. The mainstream financial media wants you watching entertainment, not financial survival guides. They want you asleep at the wheel so the institutions can front-run the trade. Fight back. Click that subscribe button right now. Do not let them silence this channel. Join the few who actually understand what is coming. To understand why the banks panicked on Monday and engineered that fake crash, you have to look east. For 20 years, China has been the factory of the world. They imported raw ore, refined it, and sold the silver back to the West in the form of electronics, solar panels, and refined bars. They were the liquidity provider. They were the release valve for global supply. But whispers are coming out of Beijing. Dark whispers that the mainstream media is ignoring. Sources indicate that starting January 1st, 2026, the People's Bank of China is considering implementing strict export licenses on strategic metals. And guess what is sitting at the very top of that list? It isn't just rare earths anymore. It is silver. Why would they do this? Because China knows what is coming. They are reading the same economic tea leaves that we are. They see the sovereign debt crises escalating in the West. They see the currency wars heating up. And they have made a calculated, strategic decision. Not one more ounce of Chinese silver leaves the mainland. Think about the implications of that for a second. The West has spent decades outsourcing its refining capacity. We rely on that flow. If China turns off the tap, 20% of the global supply vanishes overnight. The silver that Apple needs, the silver that Tesla needs, the silver that the US Mint needs, a massive chunk of it originates from Chinese refineries. This is why the smart money bought the dip so aggressively on Tuesday. It was not speculation. It was panic buying by industrial giants. They are trying to front-run the blockade. They are trying to secure delivery before the export bans go live. You thought Monday's crash was about technical indicators or moving averages. No, it was a desperate attempt by the bullion banks to shake loose enough physical metal to fill the orders for their frantic industrial clients before the China window closes. They needed your silver to ship to their clients. And when you didn't sell, when the physical holders refused to panic, the price exploded higher. The geopolitical chessboard has shifted. Silver is no longer just money. It is a strategic weapon of war. And you do not sell your weapons to your enemy when you are preparing for a fight. But the China ban is just the match that lights the fuse. The gasoline waiting to explode is technology. We need to have a serious conversation about the industrial black hole. You hear people say, silver is an industrial metal, and you probably yawn. You think of silverware, maybe some jewelry, maybe a few ounces in a catalytic converter. You need to wake up and look at the reality of 2026. The industry of today is not the industry of 1980. We are witnessing the collision of two massive trends that are hungry for silver, and they do not care about the price. These trends are the solar revolution and the AI singularity. Let's start with solar. We aren't using the old, inefficient panels anymore. The industry has shifted aggressively to TOPCon technology. That stands for tunnel oxide passivated contact cells. It sounds boring, technical, and irrelevant, right? Here is what isn't boring. TOPCon cells use 50% more silver per watt than the old PERC cells. The world governments are mandating net zero targets. They are forcing solar installation on homes and businesses. They are legally requiring the consumption of silver. And at the exact moment the technology demands 50% more metal, the supply from the mines is flatlining. But solar is just the appetizer. The main course is artificial intelligence. You know AI is the future. You own the tech stocks. You see the headlines about ChatGPT and NVIDIA. But have you thought about the hardware that powers this revolution? AI servers run hot. They run fast. They require massive amounts of electricity and data transfer speeds that are incomprehensible. They require connectors that do not fail. They require the most conductive metal on the periodic table. The contact points in the new generation of AI GPUs, the massive server farms being built by Microsoft, Google, and Amazon, they are filled with silver. And unlike the silver in your grandmother's tea set, which stays in the family for generations, this silver is consumed. It is used in microscopic amounts, spread across billions of devices, and then buried in landfills after 10 years. It is gone forever. We are burning the furniture to heat the house. And here is the kicker. This demand is inelastic. That is an economic term you need to tattoo on your brain. Inelastic means the price does not matter. If Apple needs silver to make an iPhone 18, and silver goes to $200 an ounce, do you think Apple stops making iPhones? No. The silver in the phone is a fraction of the cost. They will pay $100. They will pay $500. They will pay $1,000. They must have the metal to sell the product. The industrial buyers are not price sensitive like you. They are availability sensitive. They don't care if it costs more. They care if it exists. And starting in 2026, with China hoarding and mines depleting, the question won't be, how much does it cost? The question will be, is there any left? This is the squeeze. It is not a short squeeze like GameStop where a bunch of kids on Reddit band together. It is a reality squeeze. Physics is colliding with finance. And physics always wins. Let's look at the math, because the numbers do not lie, even if the government does. We are entering the 6th consecutive year of a structural deficit. Do you understand what that means? It means that every single year for half a decade, the world has consumed more silver than it dug out of the ground. You might ask, how is that possible? If we consume more than we produce, where did the extra come from? It came from the vaults. It came from the stockpiles of the 1980s and 1990s. We have been eating our emergency rations. The Silver Institute data shows a cumulative deficit of over 820 million ounces since 2021. That is more than an entire year's worth of global mining production. Gone. Vaporized. We have drained the LBMA in London. We have drained the COMEX in New York. The visible inventories are at decade lows. Think of it like a bank account. If you earn $5,000 a month, but you spend $6,000, you can survive for a while by draining your savings. But eventually, the savings hit zero. 2026 is the year we hit zero. When the surface stocks are gone, the buffer is gone. There is no shock absorber left. If a mine strikes in Mexico, the price doubles. If a refinery shuts down in Poland, the price triples. If China bans exports, the price goes vertical. This is what a market without inventory looks like. It becomes a bidding war. And in a bidding war between you and Samsung, who wins? Samsung has billions of dollars. They can bid the price to the moon. The only way you win is if you already own the metal. If you are sitting on the stack before the bidding war starts, then Samsung has to bid against you. Then JP Morgan has to bid against you. That is the position of power. That is why they tried to shake you out on Monday. They wanted your seat at the table because they know the table is about to get very crowded. And while the physical market is tightening, look at what they are doing to the money itself. They are preparing the CBDCs, the central bank digital currencies, programmable money, surveillance money. Why are they rushing this? Because they know the fiat system is collapsing under the weight of debt. They know the bond market is broken. They need a new cage to keep you in. Silver is the anti-CBDC. It is private. It is anonymous. It is off the grid. It is the only asset that has no counterparty risk. If you hold it, you own it. If it's in the bank, they own it. The rush to $74 is not just about industrial demand. It is about freedom. People are waking up. They realize that having wealth in the system is a liability. Having wealth in your hand is power. I want to talk to you man to man for a second. We talk a lot about charts and lines and Fibonacci levels. But let's talk about regret. The most expensive thing in the world is not silver. It is regret. Imagine it is March 2026. The headlines are screaming. Silver shortage halts Tesla production. China blocks metal exports. The price is trading at $150. You go to your local coin shop. The shelves are empty. The dealer laughs when you ask for American Eagles. He says there is a 6-month wait list. You go online. Out of stock. Out of stock. Product unavailable. You look at your bank account. You have the fiat currency. You have the paper. But you cannot convert it into real wealth. You are trapped in the dying currency. That feeling in your stomach? That is what we are trying to avoid. Monday was a warning shot. The market gave you a second chance. It dipped to $71 and let you in. If you hesitated then, do not hesitate now. The window of opportunity is closing. The smart money is positioning for the January effect. They know about the China ban. They know about the AI demand. They know the vaults are empty. They are front-running the inevitable. You have a choice. You can be the victim who watches the wealth transfer happen to them, or you can be the victor who participates in it. This isn't about getting rich quick. This is about not getting poor slowly. This is about asymmetry. What is the downside at $74? Maybe it drops to 65, maybe 60 in a total collapse. You lose 15%. What is the upside? If the shortage hits, if the China ban is real, if the industrial panic begins, the upside is multiples. 3 times, 5 times, 10 times. The risk-reward ratio is the best I have seen in my entire career. It is the trade of a lifetime. But you have to be in it to win it. This bar in your hand is not just metal. It is a battery. It stores your labor. It stores your energy. It stores your time. The government can print currency, but they cannot print this. They cannot print energy. They cannot print time. When you buy this, you are opting out of their game and starting your own. The trap on Monday failed because there are too many of us now. We are the whale. The retail collective is the new smart money. We didn't sell. We bought. And because we bought, we broke their algorithm. Now, we have to finish the job. We have to hold the line into 2026. We have to squeeze them until they have no choice but to let price discovery happen. Watch the dates. Watch January 1st. Watch the headlines coming out of Shanghai. If you see the export license news hit the mainstream, it will be too late. The gap up will be overnight. You will wake up and silver will be $10 higher. Don't wait for the news. Be the news. The deficit is cumulative. The shortage is structural. The demand is inelastic. And the supply is shutting down. I have never been more bullish than I am right now. The fake crash cleared the deck. The weak hands are gone. The rocket is fueled. We need to discuss the psychological warfare that is being waged against you. Do not think for a second that Monday was an isolated event. As we approach the triple digits, the volatility will increase. The banks will not go quietly into the night. They will use every trick in the book. They will slam the price in the futures market at 3 a.m. when liquidity is thin. They will publish hit pieces in the financial press calling silver a barbarous relic or a bubble. They will try to scare you out of your position because they need your metal. You have to be mentally prepared for this. You have to develop diamond hands. When the price drops $10 in an hour, you cannot flinch. You have to understand that this is the death throes of a manipulated system. The more violent the volatility, the closer we are to the end. Think about the psychology of the bullion banks. They are short millions of ounces of silver that they do not have. They are on the hook for delivery. If the price goes to $100, they are insolvent. They are fighting for their lives. And a cornered animal is dangerous. But a cornered animal is also desperate. Monday's crash was an act of desperation. It was a sign of weakness, not strength. If they had control of the market, they wouldn't need to resort to such obvious manipulation. They would just slowly walk the price down. But they had to smash it. That tells us they are running out of time. They are running out of ammo. And most importantly, they are running out of physical silver. We also need to consider the broader macroeconomic context. We are living through the end of the debt supercycle. The global debt to GDP ratio is unsustainable. The interest payments on the U.S. national debt are now higher than the defense budget. The only way out for the central banks is to inflate the debt away. They have to print. They have to devalue the currency. This is not a theory. This is mathematical certainty. And in a world of infinite paper printing, finite assets are the only life raft. Silver is the most undervalued finite asset on the planet. It is trading at half of its 1980 high, while the money supply has expanded exponentially. It is a coiled spring that has been compressed for 40 years. When that spring releases, the energy will be explosive. You are not just buying a metal. You are buying insurance against the collapse of the fiat system. You are buying a seat on the lifeboat. And right now, the tickets are selling for $74. That is a steal. But the ticket booth is closing. The China export ban is the sign that the nations are preparing for the reset. They are securing their resources. They are closing their borders. Globalization is dying, and resource nationalism is taking its place. In a world of resource nationalism, he who holds the gold and silver makes the rules. So, here is your strategy for the next 48 hours and leading into the new year. Ignore the noise. Ignore the minute-by-minute fluctuations. Turn off the CNBC. Look at the big picture. The back wall of the storm is coming in January, and the back wall is always stronger. Prepare yourself. Mentally, physically, financially. Do not try to be cute and trade this market. Do not try to sell the top and buy the bottom. You will get left behind. The train is leaving the station, and it is gaining speed. Just get on board and hold on tight. Check your stack. Is it enough? If the banks close tomorrow, could you survive? If the answer is no, you know what you have to do. This is the final calm before the storm. The eye of the hurricane passed over us on Tuesday. We are going to be tracking the China situation every single day. I have sources on the ground monitoring the port activity. I will know if the ban is confirmed before the mainstream media does. I will know when the inventory levels at the Shanghai Gold Exchange hit critical levels. I will know when the industrial buyers start panic bidding in the private market. This information is critical. It is the difference between getting out in front of the move or chasing it. You need to be plugged in. You need to be part of the intelligence network we have built here.